Hello everyone, so welcome to this two-part episode of conversation where I'll be talking to Oriol Caudevilla about CBDC and we will be debunking a few myths about the new topic that's going around town right now and discuss some developments in the virtual banking sector in Asia. And this is part of a season 2 of Talk to Founders podcast episode which is available on Spotify and Apple Podcast. Season 2 is focused on conversation about how sustainable finance and how financial technology can help make financial services a greener one. To find out more, click on the link in the description below. Thank you, Oriol, for joining me again today. Oriol Caudevilla is a fintech advisor, a management and strategy consultant, and a researcher on topics of digital banking and finance, CBDCs, blockchain, and cryptocurrencies. With the aim to promote a more inclusive financial system, he is now a mentor to several prestigious fintech organizations around the world, including London, Singapore, Hong Kong, Qatar, and Mumbai. Today, we will be talking about CBDC once more as we respond to the questions from the previous episode, as well as highlighting some of the key trends in the virtual banking battle in Asia. In addition, we will also spare some time for a brief discussion on the idea of sustainable finance and green fintech. So, hello, Oriol.
Hello, Chris. Thank you very much for having me again in your podcast.
All right. So we have recently talked about, CBDC and its potential in the world of finance. Could you remind us again on what it is all about and what are the benefits to CBDC? Perhaps we could start with like an Eli 5 this time, explain we are 5, because according to the feedback of some of the listeners from previous episode, the idea is still pretty abstract to some of our listeners and, they would like a simpler explanation to what this is all about.
Sure. I mean, CBDCs are actually quite a new concept, a new idea. CBDC stands for a central bank digital currency. Mm-hmm. A central bank digital currency is nothing else but a digital version of the physical coins and notes that we already have. So in other words, whenever we talk, for example, about digital yuan, we are talking only about a digital version of the yuan. The same applies, for example, for the potential future digital euro, which is going to be a digital version of the euro that we already have. So I said it is just a digital version, but I think it's more than that because unlike physical coins and notes, which cannot be programmed because they are physical, CBDCs can be programmed. So that's actually a huge improvement in the sense that it's going to allow central banks to add or remove certain features from that currency in order to, let's say, fulfill or focus on certain objectives, on certain purposes, because CBDCs, in line of what you mentioned before, can actually serve different purposes. I mean, you may issue a CBDC to promote, for example, financial inclusion, which is actually what we discussed on our last podcast in March.
Right.
You can also issue a CBDC to fight financial crime because it's going to allow central banks to track all the transactions much more efficiently. You can also issue a CBDC to replace physical banknotes and coins. You can also issue a CBDC for monetary policy purposes, etc. So, I mean, there are many reasons, many reasons behind the idea of a central bank issuing a CBDC.
Great. All right. Thank you for that. But you see, another question that was raised, right? I mean, thank you for mentioning about the fact that, CBDC is meant to replace notes and currencies, right? But another question that was raised from the previous episode is the confusion from some of the listeners, right? Like on what's the difference between CBDC and the mobile money itself? Because it's pretty similar ideas, and someone, like you who have a greater understanding of the topic, can you just enlighten us a little bit more?
Sure. About what you said now, that they are going to replace one of the objectives behind the central bank may be to replace coins and notes, but it doesn't need to be like that necessarily. So, for example, we are seeing that each central bank is approaching this topic differently. So, for example, in Europe or even in Canada, when we see that their central banks testing their future CBDCs, they are mostly approaching this topic as with the idea of having like a backup plan or maybe like an alternative means of payment. No, but it's not like about replacing coins and notes like per se. No? I mean, this may be like a consequence, but it's not like the main objective that most central banks are directly looking for. Then coming back to your question, it's true that from the end user perspective, from the consumer or citizen perspective, a CBDC may not make a huge difference to what we already have. I think the huge difference comes from the macro environment, from the macro perspective. It's in there where the difference is much bigger. I mean, from the perspective of a central bank, of a government, from the point of view of a citizen, I mean, so that we already use digital money, I mean, so this is why many people wonder if I already make payments electronically, if I already get my salary paid in my bank account digitally as well, what's the difference between this thing that I already have and the digital euro, let's say, or the digital US dollar? What's the difference going to be? Well, I mean, I would say that maybe for the end user, this difference is hard to grasp, but physical central bank money that already exists used digitally, but it's not a CBDC. I mean, in other words, while real central bank money is what we call a component of the monetary base, and therefore a liability against central bank, that money that we use nowadays digitally is just like a debit and a credit between two service providers, two payment providers, the bank and the payments company. So the thing is that when we use in the future CBDC for those payments, we are going to be using real central bank money for the transaction. So I know that it doesn't make much difference from the perspective of the end user, but we need to look at this whole topic from a broad angle. I mean, CBDCs may be very useful. I said before, for example, and we discussed this in March, that a CBDC may be used by a central bank to promote financial inclusion. So I would say that the benefits from a CBDC would come from this larger, broader picture, rather than what differences each citizen is going to see in their daily lives. So I don't know if I made myself clear, but that's pretty much the idea.
Yeah, I think it's clear that that on the difference that you have raised, because although the idea is pretty similar, right, to the end user itself, but the actual mechanism behind it is quite different, and it has actually more benefits to just mobile monies, right, when it comes to CBDC. But another question, right, which was also raised is that some of the blockchain supporters, right, always try to convince the fact that CBDC is going to be revolutionary in terms of how the blockchain technology is going to be utilized to support this idea. But is CBDC really dependent on the blockchain technology, or is this just another way for the blockchain supporters to actually promote their idea?
Well, I mean, one of the amazing things I would say about blockchain is that it can be applied to many different areas. So I mean, that blockchain was initially created to support to underpin the operations of cryptocurrencies, but right now its applications have gone far beyond that, and it's being used right now for for banking in general, for CBDCs, for video games, for IoT, and for healthcare. So, coming back to your question, well, CBDCs, they don't necessarily need to use a blockchain, even though it is normally considered that it might be not only possible but also beneficial for them to do so. So I mean, unlike cryptocurrencies, which are mostly using blockchain, CBDCs do not need to do so. I mean, it's not compulsory for them to do so. I mean, in that sense, I always like to talk about this project Other. It was a CBDC project which was performed between the central banks of Saudi Arabia and the United Arab Emirates. And in that project, what they wanted to see was whether it was feasible for them to issue a wholesale CBDC between both countries or not. And secondly, whether the use of blockchain in that case was advisable and beneficial. And they concluded by saying that using blockchain in that wholesale CBDC case would actually be very beneficial. So that's why I don't think that CBDCs are going to be entirely based on blockchain. There is, for example, the case of digital yuan, where it's going to use blockchain partially, only on the second level, where the commercial banks are going to issue the CBDC to the general public. In that level, blockchain is going to be used, but not on the initial level through which the People's Bank of China, which is our central bank, is going to issue the CBDC to the commercial banks. So it depends. The answer would be depends. I mean, blockchain is going to be part of this CBDC world for sure. To what extent? I mean, it depends, no? But yes, it's going to be relevant in that area.
All right, I got that. So basically, just dependent on the application itself, on how they want to make use of, CBDC and blockchain with whatever application they are going for, right?
Yeah, it's going to depend basically on each central bank. I mean, to what extent each central bank wants to.
What's their goal, right?
Yes, on blockchain or not. And I guess that most of them will use blockchain to some extent.
Great. All right. And, as a huge advocate on, the idea of financial inclusion as well, right? And how CBDC is promoting financial inclusion. But could you highlight some of the main concerns and drawbacks of CBDC? Perhaps, we could start with a controversial one, privacy. And the reason why I'm bringing this up is because from, my understanding is that CBDC is not a totally new idea, because in 2014, if I'm not wrong, the Ecuadorian central bank, right, did something pretty similar, but there was a huge backlash from the public, due to the trust issues, because, although 400,000 accounts were open at that period of time, right, 70% were inactive because, people just didn't want to use it. And eventually the idea was shut down in 2018. So what is your take on that one?
No, I mean, I agree with you when you said that privacy is probably the biggest concern when it comes to CBDCs. I mean, CBDCs have many advantages. I mean, undoubtedly, we spoke long about financial inclusion the other time. So, I mean, I think it's also interesting to try to see some of its risks or problems. I would say that privacy seems to be the thing that worries most people. I mean, for example, the European Central Bank, they launched exactly 1 year ago, in October 2020, a public consultation open to the citizens in Europe about the idea of launching a future digital euro. And basically, that survey was closed in January, and the conclusions, the results were published now in April. So half a year ago. And basically, it was quite interesting to see that out of the 8,200 people who participated in that survey, what people wanted most from a digital euro, 43% of them said privacy. Then they said 18%, they said security, then the ability to pay across the euro area, etc. So you can see that security is an issue as well, but it's especially privacy. Privacy is the big elephant in the room. And especially I would say that maybe more in the West even than in Asia, in the sense that whenever I'm giving webinars on this topic, I feel it's true that people in Asia also raise this privacy issue, but I feel maybe it's a bigger concern in the West for whatever reasons. So the thing is, I understand that this might be a concern, but I don't think it should be such a big concern because of several reasons. I mean, first of all, the technology to ensure that privacy is respected in a CBDC exists. That technology is there. So it's all about using the right technology. In that sense, there is one of those very interesting staff analytical notes written by the Bank of Canada. So and they devoted one on the topic of privacy. And they said that enabling privacy for users and controlled disclosure is a challenge, but it is something achievable through the use of the adequate advanced cryptographic techniques and operational arrangements. So the key in this area is technology, using the right technology. As long as a central bank uses the right technology, the citizens' privacy is going to be respected. So we need to find, and central banks need to find a balance between being capable, thanks to CBDC, to control all the transactions much thoroughly than before, and thus being much more efficiently capable of fighting financial crime, whilst making sure that citizens' privacy is well respected and also ensured. So I think that in that sense, I mean, it's something possible. It's achievable. So that's why I said before that I understand that some people may be concerned, but I wouldn't be that concerned. And I know as well, some people asked me before, like something like, oh, but now the central bank is going to know what payments I make, no? So, I mean, I'm going to be completely controlled. I mean, yes and no. I mean, it's true, but unless you pay in cash, like completely in cash, like unless you get like your salary in cash, you pay everything in cash, you are already like to some extent, your transactions are controlled. I mean, in most countries, a transactions higher of a certain amount that you make using your bank, I mean, are like automatically notified to your country's tax department, for checking whether you're complying with the tax rules or not, for anti-money laundering, checking. So my point is, I mean, it is true that the CBDC is going to allow central banks to control the flow of money more efficiently, and thus fighting financial crime more efficiently. But at the same time, I think it's kind of naive to think that right now, without a CBDC, everything you do is like completely private. Because unless you live like outside the system, most things you do can be controlled if some government agency thinks you need to be controlled for whatever reason. So I don't think people should be that worried, because I don't think that's going to be such a huge change for the worse or anything like that.
Yep. I totally agree with your take on this, because ultimately, right, there's no difference in the idea, right? Because every transactions that you do nowadays, be it digital or not, it can be trailed back to whatever, where it came from, right? Yeah, because at the end of the day, it makes no difference, right? And if the infrastructure is structured in such a way that, people can track it and trail it at the end of the day, in fact, CBDC has more benefits than advantages. I mean, more benefits than the cons, right? So it's only right that this idea is brought out more, and it will help with financial inclusion a lot more than in the future. But this also brings me to another question, which somewhat relates to the idea of privacy, and it's the topic of currency competition. Because due to its nature, right, I mean, digital currencies are international and they work seamlessly in cross-border transactions. But do you think that this would create a non-healthy competition between currencies? Because when this is no longer about technical issues, but more of international regulations. What's your take on this?
Well, that's actually a fascinating topic that I think we could discuss like for hours. But to make it like short, I said before that each central bank may design a CBDC like depending on their like policies and interests. In some cases, it is true that a certain central bank's interest may be to try to make their currency more widely used, for cross-border payments. For example, this is the case to me of China. China is trying to internationalize the use of the yuan through digital yuan. We saw that clearly, through the launch of initiatives like the joint venture that was signed in February between China's central bank and SWIFT. Also through the starting of the digital yuan tests in Hong Kong for cross-border payments. Also through the signing of the RCEP free trade agreement, which, as you know, created or will create a huge free trade area, like encompassing more than 30% of the world's population and 30% of the world's GDP. So it's true that the idea behind some central banks may be to try to make a currency more international. However, from that idea to saying that there is going to be a competition between currencies, I think there is like a long way. Because, to be honest, except for Bahamas in the Caribbean and one more case in the Caribbean as well, no country has actually already launched a CBDC. And when it comes to major economies, there's like 0 of them who have reached that stage. China is going to be the first one, when it comes to major economies, to launch their CBDC next year in 2022. But still, from here to the idea that we are going to see many CBDCs competing, it's going to take a while, and it needs to be seen to what extent they will actually compete. Because not simply because a country wants to make its currency more international, it needs to mean that they will succeed in doing so. Because there is one key area in here, which is interoperability. In order for a CBDC to become widely used, offshore, outside that own country, it needs to be made interoperable with the other like blockchain networks, other CBDCs, and that's something that we're not there yet. I mean, there have been like some attempts in that sense to create this kind of infrastructure. For example, China created this very interesting BSN blockchain service network, which is basically, well, it aims to provide this interconnectivity infrastructure across China, but also like abroad. Thus trying to establish this new digital Silk Road connecting China and the rest of the world. No? So the idea is it's a very interesting project, no? And I guess similar projects will be like done in the West as well. But well, I mean, we don't know yet to what point each CBDC will be interoperable with the other one. Therefore, we don't know to what extent one will compete with the other. I mean, I don't foresee like the world like economic order like changing like anytime soon, because the yuan or I don't know, the won become like the major or more widely used currency in international trade. No, I mean, it's going to take a while, so we need to go like step by step before like talking about an actual competition.
Right. Yeah. So basically, it just boils down to the time frame itself, and it will be a long time before we actually face that problems and the issues at hand that have to be resolved before we actually look at that. Right.
Right.
Yep. And all these boils down to the last question about CBDC, and what can we do to make this idea more easily understood among consumers and the general public?
Well, that's actually a great question. And I think what we can do is pretty much what we are doing right now. For example, I think that like trying to, and this is also what I think like trying to do for the last like couple of years, trying to participate in as many events as possible, offer as many webinars as possible, writing about this topic in general, like anything that may help people understand a bit more about this, because I mean, not only that the concept may be tricky per se, but also one big problem that I find is that some media, and not just some general media, sometimes even some specialized economic media, like they tend to make mistakes when addressing this topic. I mean, it's very common to see media like talking about or referring to CBDCs as cryptocurrencies, or like coming up with titles like China's Bitcoin, or stuff like that makes no sense whatsoever. So I think it's good now to try to educate not just people but also the media, and let them know that I mean, CBDCs are not, of course, exactly the same we have today, because it's a digital form of the money that we have. But at the same time, they are not part of this DeFi, the decentralized finance movement. They are not cryptocurrencies. They may have some technical similarities, of course. I mean, CBDCs like learned from the world of cryptocurrencies, but they are like different concepts. Actually, the rationale behind them is actually the opposite. So that's why, well, I think that what we can do is to pretty much to do what we're doing now, to try to educate and also, I mean, well, perhaps it would be good like sometimes to see the press being a bit more accurate. I'm not saying that they are not like all of them. I know that many of them are like actually like great experts and they write like amazing articles. But sometimes, well, you see some confusing articles, and that causes people like causes them to think that our central banks are creating like a new kind, I don't know, of Bitcoin to compete with with the actual Bitcoin. And it's nothing like that. I mean, the rise of a CBDC doesn't need to imply in that country the decline of cryptocurrencies. I mean, it doesn't need to be like that. So yeah, I think it's all about educating.
Yep. I guess it's the media is also responsible for how the CBDC is actually understood also, right? And it boils down to also the integrity of the reporters. I guess at the end of the day, whether or not we really need CBDC depends on whether the parties involved are able to address the issues correctly, and and the things that follow up, right, will probably need quite a bit of work also. All right. Thank you, Oriol. And, for any queries, feel free to contact me via, 10FinTech, or email me at chris@10fin.tech. If you'd like to be part of the show, just drop me a DM on LinkedIn at Chris Lim. Stay safe and see you on the next one.